Hello, my name is Andrew Thake. I'm a divisional director with Resourcing Tomorrow. I'm delighted to be joined today by Joyce Li, who's a partner and co-chair of Asia for McCarthy Tétrault. Delighted to have you with us this afternoon, Joyce.
Thanks, Andrew, for having me.
McCarthy Tétrault has been at the centre of some of Canada's most significant mining transactions. In the wake of Teck and Anglo-American restructuring, how are Canadian regulatory bodies and the legal frameworks you oversee adapting to the copper mandate?
Well, I guess that, Canada, we recently have a change of prime minister, as you know, from the front line, what we have been seeing when it comes to mega international deals coming into Canada involving significant Canadian corporations. Um, under our legislation, there is what we call a net benefit to Canada test. And that would be a key consideration. It doesn't matter, which jurisdiction the investor is coming in, as you have mentioned, Teck and, Anglo, no, it's not a Chinese investor, even European investor, American investor, if they are involved in what we call substantial Canadian corporations, combinations, net benefit and keeping jobs and headquarter activities in Canada would be of primary importance when you're trying to clear national security review or net benefit review. So that applies to the copper mandate as well. The copper mandate has very roughly speaking, two prongs. The security of copper as a critical mineral. That's one level of scrutiny, if I can call it that. For that, the identity of the investor may play a big role. The second one would be what we call copper being a critical minerals that Canada also wants to have a say at the table going forward as to where those who owns the resources. And that's the reason why the Canadian component or the commitment to Canada, as we call it, would be important to the Canadian government to see that, the transaction doesn't basically just hollow out the copper resources from Canadian control hands. So I think that, when investors are looking and doing similar deals, it's very important that they do the political due diligence on the sensitivity areas and then engage the law firms as well as, experienced GR firm, government relationship firm, to kind of investigate in those sensitivity early on so that they can build that into their merger plan. Because, very often in these mega mergers, at the table, there will be negotiation as to who is going to stay and, where are the where are the C-suites going to be located, etc. So I think that generally speaking, I don't know whether I have covered what you want to know, but that's my take on that one.
Yeah. The panel that you're speaking at Resourcing Tomorrow Hong Kong highlights the friction between Western friendshoring and established resource dominance in Africa and Southeast Asia. From your perspective, how do you advise clients on bridging the gap between stringent ESG compliant requirements in Canada and the pragmatic, often faster moving operational realities in emerging markets?
Well, I have been doing quite a few deals in Africa and Latin America. What I have been observing is that, obviously the so-called Western jurisdictions, the ESG, requirements are more stringent, but the other jurisdictions are actually catching up. And then there, in a way, from the front line, it's even a little bit more challenging because, as they are drafting and establishing their regime and requirements, the certainty level from a legal perspective is relatively low. And that opens the uncertainty part of it. I don't think that anybody seriously doing mining projects nowadays, doesn't matter with jurisdiction, can ignore ESG. Because the reclamation bonding, the environmental clearance in some of the other jurisdictions can be equally challenging, as I mentioned, because the legislation may not be as established. Now, coming to the Western jurisdictions, all of us know that it's very slow. Permitting is very slow. If you have a lake or some water body in the vicinity of your mine, it triggers all sorts of different assessment. However, from our experience, I can use Canada as an example for the Western jurisdiction. The regime, you can say, is rigid, but the other way of saying it is that it's known and established. So there are some advantages in dealing with the Western jurisdiction, but you need to. I always tell my Chinese clients, it's just a different timeline. You cannot expect to push the project in the same type of time frame. But once you follow the rules, clear it, then it's unlikely that the authorities will come back and change their mind on you, which may happen in some of the younger jurisdictions when they have a change of regime, when they have some other issues happening. Sometimes we see that even if you have got a environmental permit, sometimes they come back and have renegotiation, which creates uncertainty that is not friendly to business.
Given your role in facilitating Asia-Canada cross-border deals, how does Hong Kong's legal and financial infrastructure currently compare to, say, other light hubs, say other emerging hubs such as Riyadh for resource-linked capital?
Well, I think that Hong Kong has done a lot of catch-up in the past decade. Hong Kong Stock Exchange used to have no mining or very little mining. And as you know, it needs an ecosystem to be built up for an exchange to credibly claim that they are a serious mining exchange. And I think Hong Kong has done a great job in doing that in the past decade. Starting from, the Chapter 18, and then I know the Hong Kong Stock Exchange guys pretty well. They have been very proactive in talking to the industry, in modifying their rules to be more realistic and accommodating, especially to advanced stage exploration companies. And I think that that's all very good because Hong Kong is unique when you look at the global so-called financial centers. Hong Kong's proximity to China, but also has a common law jurisdiction or common law regime. And one of the most active, if not the biggest exchange in Asia, all of those components coupled together gives a unique opportunity. And also, for some of the bigger mining companies in China or in some other non-Western jurisdiction, the recent years of national security issues coming out from Australia, from Canada, have deterred some of those issuers seeking a listing on the Canadian or Australian Stock Exchange with the fear that just that nexus may create or trigger national security review from those jurisdictions. So Hong Kong, given the geopolitical tension, I think has a unique place to play, a unique place in the world financial map, and also some unique opportunities to pursue. The one thing that I think they're already working on, but can be bettered, is the technical support system within Hong Kong for the mining community. I think that on the capital markets and financing, there are experts, acting for underwriters, acting, for the issuers, knowing mining from a legal accounting perspective. But the technical side of things, as you know, the Western jurisdictions have a mining technical system that is different, say, from China. I think that there is still a gap there that needs to be bridged.
Mm-hmm. With the Canadian government tightening the investment calendar at the ICA, specifically regarding critical minerals, how has this changed your strategy for Asian investors looking at North American assets?
I guess, as you know, national security review and regimes in all jurisdictions, unfortunately, are not just pure legal, it's political. So geopolitical tensions change what we see in the front line in conducting these reviews. Um, Critical minerals is going to be an ongoing agenda for all relevant jurisdictions. Everybody is trying to make sure, as I said, that you do not lose say in where those resources will be used or will be directed. Because I think Canada rightfully would like to see that critical minerals coming from Canadian soil would be used in a way that is not seen as adversarial to Canadian interests. For that reason, they have a critical minerals policy, but given the warming up of the relationship between China and Canada, in the front line, we have been seeing that they may be more open to investments that are not seeking to be dominating, if I can call it that. So if you are acquiring the whole mine, with critical minerals, with, very little willingness to give undertakings as to, where those minerals will be used and where those minerals will be going, I think that national security will be a real problem. And I would think that from the Canadian perspective, rightfully so. So I think that for Chinese investors or other jurisdictions, including Middle East, where from the Canadian perspective, it may be sensitive, the best strategy is to seek a minority stake or be one of the two big shareholders so that there is some comfort for the Canadian government that the corporation owning that mine will be run in their words, market fashion. That the minerals will go to not just designated hands, but will go into the market, and it's a for-profit organization, and therefore whoever pays the highest price will get it. So I think that those are considerations that needs to be addressed early on when somebody is planning for an investment. And it's also very important that the investor is clear on its objective as to what it is trying to achieve for this investment. Acquiring absolute control on a mining company that controls critical minerals on Canadian soil, I would think that still would be very challenging.
So, in conclusion, do you think the 2026 M&A supercycle is going to be defined more by who is legally allowed to buy rather than who has the most capital, or will it be defined by something else?
Well, it's funny that you raised that question. It's not a secret that Canadian mining has been delayed or hindered because of the lack of capital. So there's a realization that we need to be friendly to capital. So that's one change that we observe in late 2025, early 2026, that the government seems to now have come to conclusion that Canada, the Canadian economy, for which mining is a very big part, it's has some major risks. And therefore, capital is now more treasured. So anybody with capital injecting into the system would would get a friendly reception, let me put it that way. However, they are also trying to balance that they don't sell out the national resources during these difficult years permanently. So I think joint ventures with Canadian companies with appropriate governance to give assurance to the Canadian government, as I mentioned, may be the way to go. And it's not just like you are not allowed. It used to be in the past 5 years after COVID, we saw a trend that because you are who you are just not allowed for stop. We are seeing that trend to change a little bit, warming up a little bit to capital, and there may be more opportunities.
Thank you very much for your time. That was Joyce Li, partner and co-chair of Asia for McCarthy Tétrault, who will be joining us for Resourcing Tomorrow Hong Kong on the 16th and 17th of April. Thank you very much,
Thank you.
Joyce.
Thank you, Andrew.